Alright, let's try something a little bit different here. Yeah, stonked up. We're back. You change your name all the time. I've noticed. 3 monetized streams. I hope not. There should only be 2. Yeah, I lost internet a few minutes ago. That was really upsetting when that happened. Yeah, dark pool analysis. Alright, I see 2. I see 2 stonked up, thankfully. Not 3. I'd be a little embarrassed. Wait for a couple more people to join here. Hey, so I had an inquiry from a sponsor yesterday, and they wanted to know if I was interested in dark pools. And I said, actually, it's funny you should mention that. I am interested in dark pools. So, we had a conversation, and when it comes down to it, I don't really know what I'm doing with dark pools. I'm interested in the information. A lot of people take this very seriously, but I'm having a really difficult time figuring out how I can actually use this data. So I wonder if there's people here that we can look at this together, and let's see if we can figure out as a team how we use dark pool data. I mean, some things here are obvious. I mean, we're looking at Tesla here right now. We've got a lot more calls than puts in the game. Sentiment is bullish. Okay, I like that. We've got twice as many calls as we have puts. But what do I do with this information? And I'm actually asking, I really don't actually know. So we've got a lot of money flowing into Apple, Tesla. Okay, SPY is actually somewhat of an outflow. If we're just looking at calls, the ones that are getting the most attention right now, Apple, Tesla, Amazon, SPY, AMD, that makes sense. Puts. So SPY, Tesla, AMC. So big bearish pressure on AMC with a lot of puts being purchased today. That's interesting. All right, but let's see. Top options order flow. Where's shares? I'm interested in shares more so than options. Does anyone know how to use dark pool data and can coach us through how to do this? Thank you, Kellen. Glad to be back. I just lost internet at my house for a couple of minutes. Just one of those funky events that takes place. I was worried that it was my new computer giving me a hard time, but I think it was just the internet boxing me out. I don't know what happened. All right, IPO, top flow. Is there another switch on here somewhere that I'm missing? Invite and earn. Quarterly earnings. Dark pool blocks. All right, let's just type in something that we like here. Let's take a look at AMC. What do we have going on here in AMC? All right, so at 347, so end of the day, we had $141,000 spent on call options with the strike price at 55, so just a little bit out of the money if I'm not mistaken. 299 contracts, unusual, aggressive, and this volume actually is higher than the open interest. Okay, and this was performed as a suite. Thomas Larson, this is WhaleStream.com. It's got my invite at the top. That is an affiliate link, so it would give you $10 off and it would give me $10. So if you sign up with it. But I don't really know how to use dark pools yet. I want to learn so that I can make a proper video on this. But all right, so what I do know about dark pools. So this is interesting. All right, this much makes sense. So I can explain this. Imagine if a big hedge fund give me one. Let's say Susquehanna wants to go and sell 1 billion shares of Coinbase. If they just show up to, what is Coinbase traded on? The NASDAQ probably. If Susquehanna shows up to the NASDAQ, the market online, and says, we're here to sell $1 billion or 1 billion shares of Coinbase, the market is going to freak out. They're going to say, look, Susquehanna's here, first of all. And second, they're here to sell 1 billion shares of Coinbase. So Susquehanna wants out. This is not a stock that I want to hold. So people are going to start dumping their own shares of Coinbase. Now that's no good for Susquehanna because they're like, oh shit, people are dumping shares. The stock price is going down. I'm here to sell 1 billion shares. Just because I've showed up, all of a sudden the stock price is going down. So if I go and dump this 1 billion shares now, even in pieces, I'm not getting the price I want. Because as soon as I got here to sell, other people started selling. That's no good. And likewise on the other side, what if Cathie Wood shows up and says, I would like to buy 1 billion shares of Coinbase. If she shows up by herself, Susquehanna's not there, Cathie Wood just shows up, I'm here to buy 1 billion shares of Coinbase, the market is going to be like, hell yeah, Cathie's in, let's go. People are going to start buying up their shares of Coinbase. People are going to stop selling because Cathie Wood just showed up and she's got big money to buy shares of Coinbase. Stock's going to go up. So once she shows up to buy, all of a sudden the stock price is going higher. And she's like, guys, she doesn't want the stock price to go up because now she's got to spend more money per share. She wants the stock price to stay nice and low and casual while she goes ahead and accumulates her billion shares. She doesn't want the stock price going up. And likewise, Susquehanna doesn't want it tanking. And imagine what the market would do if Cathie Wood buying 1 billion and Susquehanna selling 1 billion showed up at the same time. The market wouldn't know what to do. And neither party wants that kind of volatility. So to make this arrangement, they go off of the main exchanges. They go to the dark pools. They set aside. Oh no, I'm losing my internet again. Oh, I almost lost the internet for a second. I got the little spinning wheel of death for just a second. I think I'm back though. Neither side, Cathie Wood doesn't want to show up to buy 1 billion because then the price goes up and she can't get in. Likewise, Susquehanna doesn't want to show up to sell 1 billion because then people will dump, the price goes down, they don't get the price that they wanted on the way out either. And they don't want to show up at the same time because the market will freak out. So they go off to the side to the dark pools and they make their exchange there. So now you've got 1 billion shares traded between Cathie Wood and Susquehanna off on the sidelines, and they don't have to report that transaction for something like 48 hours. Some companies do have a policy where they'll disclose immediately. I think the ARK ETFs actually do disclose pretty quickly. But if you've got Merrill Lynch and JP Morgan, I don't think they have to report that for like 48 hours. So we as retail traders wouldn't even know that these companies made a transaction on the sidelines, and therefore it won't affect market price. And that's exactly what these institutions want. They want to make trades back and forth to each other without having to disrupt the market. It's just smoother that way. That's what dark pools are for. And sometimes when you're trading 1 billion shares in a day, that might exceed the entire volume of all the traders on the regular market. Dark pools have something like 30% of all shares traded on them. 30%. So it's not this little tiny small group of people trading back and forth that are massively outnumbered by the open market. No, it's less than what's traded on the market, but it's still a significant amount. I mean, 30% is a lot. And it makes sense right there. Fahrenheit 2021, he says, dark pools are perfectly fine when it's institutions using their finances and their cash. However, dark pool is not okay when it's a majority of retail's order flow being funneled through. That's a different story. So Fahrenheit 2021 is saying, all right, what if Citadel is receiving a metric ton of Robinhood users' orders? Robinhood is going to send these off to Citadel to make the transaction on their behalf. I don't know, is that what PFOF is? Because I'm not under the impression that they're traded in dark pools. I don't get that impression, but you guys correct me if I'm incorrect. Correct me if I'm wrong. My understanding is that when Robinhood sends its order to Citadel, Citadel trades it on the NASDAQ, on the Dow, the New York Stock Exchange. They don't go to the dark pools to go and make those transactions. Because you're talking about only, 1 million shares in an hour. I mean, that may not be enough to even get onto it. Well, that's enough to get onto a dark pool. But I'm not under the impression that they're taking retail traders' orders, bundling them to trade on dark pools. I'm getting the impression that they take orders, bundle them, and then trade them on the open market. Because when I trade on Robinhood, my volume of that trade is being traded on that stock. You can see it when you look at, even Robinhood's own data. It'll show that your trade is being reflected in the day's volume. If that were being traded on the dark pool, you wouldn't see that. It's on the dark pool. It's not getting reported back to the NASDAQ for 24, 48 hours, sometimes longer than that. So I don't think that's correct that dark pools are being used to funnel retail traders' money into some sinister pot. I'm not getting that. If that were happening, I would agree it's an issue. But if anybody has deeper insight into that and you're not just citing Wall Street Bets DD, please do inform us, because I want to learn how to use dark pool information very well. That's kind of the point of doing this right now. What you can use dark pool share trade information for is that these points tend to be support and resistance. Now you think, back up for a second, the only reason you buy shares is because you think the stock is going to go up. But you could sell shares if you think it's going to go down, or if you bought prior The stock has gone up and you're taking profit. Sell than to buy. And that means when you see somebody selling, it's not necessarily bearish. They may have tripled their money, and that's why they're selling. So it's not necessarily a bearish sign. But when you see people buying, it's pretty much always a bullish sign, unless they shorted. But short volume is usually less than 10% of a stock's total volume. So you may have somebody who shorted in the past, the stock has gone down, they're buying, that could be a very strong bullish indicator. But there's more reasons to sell than buy, and therefore selling is not always bearish. So when we apply this now to the dark pool, let's say Susquehanna sold Coinbase at $250. Cathie Wood bought at $200, or the stock was trading at $250. Susquehanna was willing to sell 1 billion shares at $240 if Cathie Wood would buy them all at once. So she's buying shares for $10 less than what they're trading for on the open market. In exchange for Susquehanna selling for less than what the stock is trading for, they can move their whole block in one transaction. They don't have to fight with liquidity to try to find buyers for this. So now Cathie Wood is sitting on shares at $240, a stock that's trading at $250. The conventional thinking would go, if the stock is dropping down to $240, you're going to start finding support there because you have a really, really big institution that has just demonstrated that it thinks $240 is a great price to buy more. So that could act as a support point. And people that are looking at this information, the ARK ETFs, they publish every day what they're buying and selling. So if you get it across the print that, hey, Cathie Wood just bought 1 billion shares of Coinbase at $240. The stock's at $239 right now. This is a good opportunity for me to get in as well, because we've seen the conviction of the big players are also interested in buying at this price. So they get in on it to access support. Likewise, you can see it, the resistance side too. Hey, somebody just is selling, 1 billion shares at $260. Maybe that's a point where people or other institutions are going to start getting out, so that can act as resistance. Now, this all makes sense to me. I kind of get the idea. All right, so Lawrence, he brought up the same thing. Lawrence says, you also have an institution that thought 240 was a great price to sell. Okay, that's true. And it took me a really long time to kind of figure out why that's not as important as the person who bought. Because Coinbase has traded in the 190s before. All right, so if this institution bought at 190 and sold at 240, they're selling at a profit. That doesn't necessarily mean that they think, hey, this is a great point to sell. They may be dollar cost averaging out. They may be taking some gains. They might be wanting to roll into calls. There's all kinds of reasons why they could be selling. And you're right. Somebody did think, hey, this is enough for us. Let's sell it. Let's move this whole thing off in one block. I want to get rid of it. But doesn't that change the narrative a little bit, whether they're selling at a loss or whether they've made money, they're satisfied with it, and they want to move on to something else? It's a different type of discussion. You can sell for multiple reasons, but you only buy when you think it's going to go up, unless you're short, but that's less common. I mean, it's possible to be short 1 billion shares of Coinbase, but you're not going to find that very commonly. So does that make sense? Because I think, who was that? Lawrence, I think that is a great point that you're making. And I really had to think about that and go through a lot of steps in my head to determine what was going on there. But I hope that makes sense to you. Let me know if it doesn't, and we can kind of dig into it further. But let's, all right, so AMC, we saw at the very end of the day, people are buying calls. All right, right now the stock is at 51.55. It's really low for AMC. Somebody bought calls, 299 calls at the $55 strike at the dark pool, expiring next week, or the week after next. And then just before it, so this is a sweep, it's probably the same person. They broke it into 2 separate trades so it would be easier to find fills for them. They bought another 546, $55 strike, same exact expiration. So you see how these 2 trades are basically the same thing, just 1 minute apart? Whoever was buying these calls thought it would be too difficult to get almost, what is that, 845. They thought this would be too difficult to find somebody that was willing to sell them 845 calls in one shot. So they broke it into 2 different trades. That's called a sweep. And you can see it right here, a sweep. All right, a couple of minutes prior, somebody else bought some calls. A lot of calls being purchased on AMC at the very end of the day. And then about, entering into power hour, you had people buying very, very deep out of the money puts. This is a little bit closer to the money here, this put at the $45 strike. What I'm thinking looking at this, and remember, I'm not an expert on dark pool data. I'm hoping somebody in here, Stonked Up, I'm going to ask you to explain the golden sweep, because I don't actually know what that is. I know what a sweep is, but not a golden sweep. What I'm looking at this data, and remember, I'm not an expert. That's why we're doing this. I kind of wanted to do it as a team. I was hoping somebody else would be able to kind of coach us through here. But when I'm looking at this, I'm seeing people speculating on the price of calls, on the price of AMC going up over the next 2 weeks in 3 big trades. And then I'm seeing people buying hedges right here with this $25 put expiring in August. That's what I think this is, because you don't necessarily, I mean, it could be a speculator, but I think more likely it's a shareholder who's buying puts as a means of protecting himself if the stock drops. And in these puts, at 3 o'clock, 2 o'clock, 2 o'clock, we have a sweep going on here. People buying 1, 2, 3, 4 sets of puts, about 2,400 puts in about 7 minutes at the $45 strike. So somebody out there thinks that AMC is going to drop below $45 by the end of next week, and they spent about $320,000 in order to gamble on that. It could potentially be somebody hedging against a long position too. We don't know. That's what I think. AE says AMC price is already priced in at 50. The longer it holds at that price, the less probability it will ever gamma squeeze. Common sense. Yeah, I think the gamma squeeze is still possible, but the short squeeze starts coming off because you have a lot of time now for people to get out. Short squeezes have to burn hot and fast. By relatively, I mean, they could take place over a period of several weeks, but you can't have a short squeeze slowly grinding through a year. I mean, you kind of can. But to see those huge spikes like we saw on GameStop, AMC, if that's what you're looking for, it's not happening as a short squeeze. You have to have lack of liquidity at a certain price in order to really get that short squeeze. That's why you had GameStop rocketing up. The short sellers could not get out. They could not cover their shorts. That's clearly not the case with AMC because the stock is wallowing between 50 and 60 for a really, really long time. Now, I'm not playing AMC. I played a straddle on it last week at the $60 strike. Actually, it was a iron butterfly is what it was. Made a few $100s. It was cool. It was fun. But it's not the type of thing I'm going to be trading very often. This is a speculator's stock. Right now, I've got the Sonic spread going on with GameStop. Let's see what's going on with GameStop here. That's all we get for GameStop? No recent orders on options on GameStop. Is this possible? Nobody bought puts? 1,000 calls purchased? All right, I'll take it. Somebody bought 50 calls at the $900 strike, expiring. So this is a Leaps. Somebody bought a Leaps at the $900 strike. I expect that's a speculator. Only one. It should be the pinned comment there. It's WhaleStream. WhaleStream is what this is. It is a paid service. I think it's $60 right now. With my referral, it'll knock you down to 50, and then I would also get 10 on top of it as a referral bonus. And that referral is available to anybody. You can refer your own friends and get the same thing. Right now, they plan on increasing the price soon because they're going to add more features to it. I think they're going to add the share information instead of just the calls and puts. And the price is going to go up. In the meantime, it's a decent price. If you're an active trader who can actually use this information, then I think that's a good price. Because I've seen people burn through thousands and thousands of dollars every day speculating on AMC. So if this information could be helpful to you and you're the type of person who does that, then you might benefit from having a service that can provide this information. Now, when I'm looking at this, all right, this is just me using AMC. I'm seeing people speculating that the price is going to increase, purchasing a hedge, and I don't know what to make of this. Why would people be sweeping these $45 puts? Are they buying puts as a hedge against downside next week? Or are they buying puts because they think the price is finally going to drop? I don't know. That's hard to figure out. Richard Ortiz says, if everyone thinks it's impossible for a short squeeze, then the institutions will begin to short again. And if it rises, they'll get scared and buy. And there goes your next level short squeeze. Yeah, that would just be that would be another short squeeze, Ricardo. So yeah, you can always get back into a position where a short squeeze is possible. You just need people to start shorting again and then people to buy it up once more. So yeah, you can always go back to a condition of a short squeeze. But you have to create those conditions first. And I don't think that exists with companies like Clove. I don't think the conditions are right now. They could change, but I'm not seeing it at this point. Angel Rodriguez says, American Independence Day weekend, and we are all going to the American movie cinema. Nothing is more patriotic than to burn the hedgies. I dig it. Good stuff, man. Why buying shares in dark pool and selling them in open market is not illegal. You can definitely buy shares in a dark pool and sell them in an open market if you want to. I mean, it's for everybody. You can do that. I think even individual retail traders could trade in a dark pool if you really wanted to. It just wouldn't make sense because it's very expensive to do that, and it's kind of a pain in the ass for us. But I think we do have the ability. If you really want to get into a dark pool, you can do it. You're just trading in an over-the-counter exchange. It'd probably take a lot of legwork on your part, but I don't see why it would be impossible. So let's look at Clove, okay? On Clove, you've got people buying calls at the $12 strike today, buying puts at the $7.50, both at end of the day. This one's interesting. At $146, somebody bought calls at the $43 strike. They spent $15,000 on it. When the stock was trading for $11.57, they bought calls at the $43 strike. That's really, really high. So I would expect that this person, or this institution, is speculating that the price is going to go higher. I mean, there's really no other reason to be buying calls at that price. Right? I mean, unless they're short. Is it possible that they're short a huge number of shares of Clove and they want to hedge against a huge price rise? Larry Richards says, I'm wearing a Theta Gang hat and not selling options against AMC. No, I did. I entered an iron butterfly last week. I had an iron fly at the $60 strike. That counts, right? The consortium said open market equals free market. Don't cry, just buy. Yeah, that's really the point, man. All right, I want to get to the point where I can actually figure out, all right, what's the top order flow? All right, Apple. $29 million of calls are coming into the market versus the puts. We had $12 million of puts, $29 million of calls. Okay, so all flow, this is just giving us the highest point here. All right, $29 million of calls entered into Apple today. 25 million calls on Tesla entered today. I still don't know what to do with that information. All right, you want to look at NVIDIA? NVIDIA. Uh-oh, I'm not loading. Don't tell me I lost connection again. Okay, we're good. All right, wow, lots of calls on NVIDIA being purchased today. Look at all that. Wow. Every single one of the top values. Let's look at who spent the most money. At 2:19 p.m., 3 hours ago, somebody spent $1.1 million to buy at-the-money calls on NVIDIA. 284 contracts for $37,000 each. Expires next week. That can't be right. 37. Oh, open interest. Yeah, they spent $3,785 per contract. The open interest is $2,386. And they did this in one shot. Look, that is a block trade. They didn't sweep that. They did it in one shot. Stonked Up, does it differentiate whether the person is buying or selling the calls? Well, it's the same. So for every buyer, there's a seller, right? But the way you can determine... now, does this mean... All right, well, let me start with this. So the stock is trading at 816, right? The strike is 800. So somebody was buying in the money calls. All right, you also have somebody selling in the money calls. But the reason it's green is because they must have bought at the bid price or at the ask. They must have bought at the ask. So this is being recorded as a purchase. Somebody paid more money to purchase the calls than the mid. So if this were recorded in red, then it would indicate that somebody was willing to sell calls at the bid. So they wanted out quickly. Versus this, we've got it recorded as a buy because somebody bought at the ask. That's the same thing with stocks too. So, it'll be recorded as like a selling order. There's selling pressure if people are selling at the bid, and recorded as a buy if people are buying at the ask. So same difference here. This is showing that people are willing to pay top dollar for calls on NVIDIA. I mean, that's everything. Everything is calls. Am I only looking at calls or something? You know what I'm thinking here, guys? Look at the put flow 0. I'm thinking that the information isn't updated yet. Oh, never mind. There it goes. I had to turn on cells. Okay, but the put to call ratio, for every 100 calls, there's one put. So that's still really, really high ratio. Although we do have some call selling here once we turned on sales flow. Is that giving me just sales? No, because there's a buy right here. All right, when I hit this button, it's only showing me the bearish positions. And when I turn it off, I think it's giving me everything. Because when I go over to Apple here, we can see the bearish position. 0.08. So for every 100 calls on Apple, there's 8 puts. I don't know, looking at NVIDIA, I mean, it's obviously an extremely, even if I do turn on all the selling, still a really, really good ratio for the bullish side. I'm viewing the sales. Sentiment is inverted. Sold calls are bearish. Sold puts is bullish. All right, that makes sense. That's our wheel gang. All right, so somebody here at 9:39 in the morning sold calls at the $840, sold $1 million of calls at the $840 strike at the time when the stock was trading for $812. So they were probably selling covered calls, expiring in 2 weeks. Yeah. Cadet Triplet says, love the content on Theta Gang. Made a killing on SPXL with a debit and credit spreads. No money out of my pocket and $200 one day profit. Thank you. Congratulations, Cadet. It's awesome. Congrats, dude. Now, what do you guys want to look at? You want to look at GameStop? All right, so if we're looking at the calls, all right, somebody bought calls at the $200. Now, what if I flip over to sales? Will it show me that somebody was willing to sell those? No. So this is showing me that somebody bought calls at the ask at the $900 strike, so it's recorded as a purchase. And then somebody bought calls at $250 strike, likewise recorded as a purchase. If we go to the sales, this is where somebody was willing to buy at the, or sell at the bid. So these will be recorded as sales. Somebody was willing to sell the 190 strike at the bid, almost $1 million worth of it. So somebody really wanted that downside protection. And likewise, somebody really wanted to sell or to buy puts at the $257 strike. Or sell calls, I'm sorry. Somebody really wanted to sell calls at $275. So that, I think, is a covered call. That is, I don't know. Maybe that's also a covered call. Who knows? Yeah, I'd love to, all right, we'll do Leonardo. Let's do Neo and Lee, or Lai. Then I'm going to get going here because tonight's my night out with the boys. I don't want to keep them waiting too long. I just wanted to mess around with this website. Hey, if anybody really knows how to use dark pool information, like they're really proficient at it, please do hit me up on Discord, and we'll get you through for either a live stream or we can do a collaborative video. I want to educate the world on what a dark pool actually is, because I don't like the conspiracy theories floating around. Problem for me is, even though I know what a dark pool does, I don't know how we can use this information. In fact, I'm really struggling to even read what's going on here. So if you're good at that, hit me up. We'll work together, and then we can educate the population. I think that would make a big difference to a lot of people who think dark pools are ways for hedge funds to screw retail traders. I don't think that's the case. And I'm not going to say her name. Wants to know when the TSP video is. So I started recording it already, and I've got the script. So I'm going to try to do that this weekend. That might be my next video. Either that, or I'm going to record the video on Tufi, who took $100,000 of his mother's life savings and gambled it and lost it. That's a really good video. So those two are definitely going to be over the weekend. All right, what did we want to look up? You wanted to look up Lee, and is that the lithium? All right, Lee, what do we got here? We have somebody, when the stock was trading for 35, somebody bought put leaps for $1.1 million. So it's either a speculator who thinks it's going to go way down, or it's somebody hedging against it. I think this person probably, and they're buying 2,000 put leaps as a hedge against it. That's what I think. Stonked up wants Toofy. Yeah, Adam, I'm getting there, man. I hope to reach 100,000 this month. So look, if we look at the time, let's look at the time. Or not expiration. I want the times. All right, if we look at the times, there's not a whole lot of options trading going on here. But there's definitely 6 times as many puts as there are calls. So that would indicate that there's bearish sentiment right now. Yeah, here it is. Bearish sentiment on LI. Is this a lithium company or is this the auto company in China? I think this actually, let me know. Oh, there it is. Li is an auto company, Mikey. I think Chinese. Yeah, okay, that sounds familiar. And yes, Discalibre, the poor man's covered put, can still be profitable if the stock goes up. You can make money as long as the stock is moving gradually and not going way up and down. All right, there was something else in addition to Li that you wanted to look at. NVIDIA. Where'd it go? Toofy vid, Toofy next 3K. Next 3K is going to be next week. I'm about to close the trade now. I wanted to close yesterday, but didn't get a fill. Okay. All right, whatever. We'll look at one more. Somebody mentioned Wish at one point. Let's see. What's going on with Wish? So there's definitely a lot more. Sentiment is bullish. I hope so, because I still have calls at the $40 strike getting ready to expire. But people are willing to buy today. Like we've got these two right here, split it into 2 orders. 1,000 calls were purchased at the $17 and $18 strikes when the stock was trading for $11. And this expires in a week, 2 weeks. So obviously pretty bullish right here. Somebody thinks it's going up. Yeah, there's a lot of bullish pressure right now on this. And then we've got people selling calls and puts. So selling the call at the $20 strike, selling the call at the 11. I think a lot of these people are probably selling covered calls because these are all out of the money. Every single one of them out of the money, out of the money. Here's one, $27,000 worth of calls at the money. But mostly, all of these are out of the money, with a few exceptions. So I think people are selling covered calls here. And there's really nobody selling puts. There's a handful of people selling puts, all at the money. This is starting to make sense to me. When I flip over the sales flow here, it's showing me who's selling calls, and if the strike is higher than the price at the time of the trade, it's most likely a covered call. And then you've got puts being sold at the money. If you're selling an at the money put, you're bullish. So this is actually really, really good. This is actually really bullish. All right, I like that. Let's keep this one in mind. Let's keep Wish in mind for a bullish position. If this works out and Wish starts rocketing over the next 2 weeks, then we'll know that this dark pool data would have printed us a ton of money if we had used it. Stats Edge Trading says, remember, if the calls were bought up there, they were also sold up there. Every bullish bet is a bear on one as well. Right, but if you're buying a call, like right here, somebody bought a call at the $18 strike when the stock is trading for 11. Is that bullish or bearish? Right? Somebody thinks the stock price is going to go up to $18. They're bullish. So somebody sold a call at $18. If you're selling an out-of-the-money call, chances are it's a covered call, pulling premium, and you don't expect the stock to go higher than 18. So it puts a lot of pressure between 11 and 18. That's the way I look at it. You're right, there is somebody selling a call at $18. But if the stock is $11.61 and you're selling the call at the $18 strike, is that really bearish? It means you're bullish between $11.61 and 18. And once you get to $18, now maybe you're bearish. Or maybe now you feel like it's fair. When you're buying an out-of-the-money call, you're bullish. When you're selling an out-of-the-money call, it means that you're bullish up until that price. So I see this $18 call exchange as being a bullish indicator. Same thing with the 17, same thing with the 16. Somebody here who bought this call believes the stock will go above 16. Right now it's at 11.50 or 11.66. Somebody here is bullish between 11.66 and $16. So that means they're bullish for now, but they're willing to change their mind if the stock goes up 40%. That makes sense to me. I hope that makes sense. Only about 10% in the money on the Wish 18 call. Only about 10% in the money on the Wish 18 call. This Wish 18 call is like 70% out of the money. I think you made a mistake. And then if we go to sales flow, okay, we have somebody selling the call at $20 when the stock is $11.69. So at $20, they switch to becoming bearish. Yeah. And Klaus Hivitowski says, can brokers bundle orders and have them go through dark pools? I remember during GameStop congressional testimony, Citadel was saying stuff about bundle retail orders. They can do that, but I don't think that they can go to dark pools with it, or that there would be any benefit for them to go to dark pools. They can definitely bundle orders, but they can't, as far as I'm aware, they can't bundle orders to move to a dark pool. That there's no reason to do that. These are retail trades being funneled through the NASDAQ or the New York Stock Exchange. So they would be bundled and then traded on the open market, just like the retailer intended. Maybe they can do some rigmarole and bundle retail orders and move them to a dark pool. For some reason, I just can't see a reason why you would want to do that. You want that volume to be public. You want to trade in the simplest way possible rather than make it complicated. And there's really no reason to try to hide retail orders trades either. I don't even think there's probably a SEC regulation that says they can't do that. All right, Stonked Up wants me to try to pronounce Klaus Ewituski. Klaus Ewituski. Some Polish or something like that. Hungarian, I don't know. Stock Service says, stop calling it dark pool and start calling it private. That is probably a good idea. If we as the public stopped calling these dark pools, giving them these nefarious Marvel comic names, and just started calling them private exchanges. Because that's all they are. They're private exchanges where buyers and sellers with huge blocks can go and exchange with each other without bringing the volatility to the market. That's all it is. And by calling them dark pools, I think we start scaring people into thinking it's automatically something nefarious, and it's not. You tell me, if you are long, what's everybody long right now that they probably shouldn't be? Let's say you're long AMC, all right? If Merrill Lynch shows up and they want to sell 6 billion shares of AMC, is the price of the stock going to go up or is it going to go down? It's going to go down immediately because the market is going to freak out. And they don't want that, because if the market freaks out and the stock drops, all of a sudden they're not getting as much money for their AMC shares as they wanted. So they go to the private market and they find a buyer and a seller, they connect with each other, and then they go and make a market. And that's actually a good thing. This stops all this crazy volatility that we would have. Mohammed Hussein, this is WhaleStream. I've pinned my referral link to the comment if you're interested in that. Let me make sure you get it. There it is. WhaleStream.com. Here it is. This right now, if you use my referral, it's a little bit cheaper. I think it's $50, either $50 or $60 with my referral per month. So it's not cheap. I mean, you are going to be paying for it. They do intend to increase it to $99 within the next 2 months or so. But if you subscribe now, you'll be grandfathered into the cheaper price. That's my affiliate link. So you would save $10 by signing up. So I think it would knock it down to $50. And I would get $10 as well from your referral. And then you could, if you wanted to, refer other people as well. This is available to everybody, not just me. So this is WhaleStream. It's pretty good. I want to learn how to use this data more proficiently. Right now, I can only tell a few things, and what I can tell is that Wish is suddenly very bullish. You've got almost 10 times as many calls as puts. And if you look at who's selling, these are all selling covered calls, and they're all selling at the money puts. So these are both indicative of more upside to at least like $16, $15, $14, $16. So, all right. I hope that was helpful to some people. This was pretty cool. I enjoyed it. I'm going to have to do a lot more digging into how to use dark pool information proficiently. If anybody's really an expert on it, hit me up on Discord. I'd love to get something together. We can both be on camera and talking about it. I think I'm pretty good at educating people. So if you were to instruct me, I think I'd be able to connect the dots between somebody who's a total novice at this and then you who's the expert. I can kind of serve as an intermediary. So You guys let me know if that's something that you're an expert on and you want to do, and we'll put it together. So this would be very exciting for me because I think this is a really cool tool, and I'm dying to learn how to use it. So anyway, thank you guys for joining me. I'm going to get going because it's my Friday night, and I want to go enjoy it a little bit. But I had fun doing this too. So happy 4th of July, everybody, and everybody enjoy their weekend. And on Monday, try to keep it together while the market's closed. I know how stressful that can be. I'm going to be losing my mind as well. So thanks, everybody. Take care.